you own some digital assets, whether that's Bitcoin, whether that's Ethereum, whether that's Avalanche, whether that's owning an NFT. And ultimately, what you're going to find is more things that are in your normal realm are digital.
Yeah.
For the last week, Bitcoin has pumped 30%. Why?
30.
Discover insights on the promising prospects of Bitcoin with Mark Yusco, founder and CIO of Morgan Creek Capital, and a highly sought-after figure in the cryptocurrency industry. In our discussion, we delve into why investors, particularly those belonging to the Gen X and younger generations, can rely on the system's potential to flourish in the ongoing bull market. Despite Bitcoin's impressive 30% rally and sustained growth this month, many Gen X investors remain hesitant to venture into the industry, despite the blockchain's superior performance in processing transactions and ensuring secure banking. Could Bitcoin achieve widespread acceptance in mainstream finance and ultimately become the next global currency standard? Since its inception in 2009, Bitcoin has sparked a massive surge in the popularity of cryptocurrencies, which are now collectively valued at over $1 trillion. In just a few years, these digital assets have evolved from mere novelties to trillion-dollar technologies with the power to transform the global financial landscape. Today, investors are increasingly turning to cryptocurrencies such as Bitcoin, as they represent both an investment opportunity and a means of payment for a wide range of products and services. According to his recent statement, Yusco predicts that Bitcoin will surpass gold in performance this year, following its decline in 2022. While acknowledging gold's status as the ultimate measure of value, Yusco believes that Bitcoin's potential for growth is even greater. He draws parallels between today's market conditions for risk assets, such as Bitcoin and tech stocks, and the dot-com bubble that characterized the early 2000s. According to his analysis, while Bitcoin remains the cryptocurrency with the highest market capitalization, it may not necessarily be the top-performing investment. He also said, Bitcoin is the most uncorrelated asset I've ever seen in my career. Don't forget to subscribe to our channel and click the notification bell icon to stay updated with our latest content.
It's digital. And the easiest thing to own to me is Bitcoin.
Yeah.
Why? Because Bitcoin is digital gold. Gold is money, right? An asset that exists in the absence of a liability for 5,000 years. A single ounce of gold bought a fine person's suit. From Cleopatra's time to a suit of armor to a zoot suit in the 20s to Savile Row today. A single ounce buys a fine person's suit. The perfect store of value. And it's also a perfect store of value if you think about stocks. There was stocks making new all-time highs. I mean, not right this second, but lately. Really. You realize that's because we price them in a currency that's going down. If we price stocks, the S&P 500, in gold, it's dead flat since 1996. Well, what happened in 1996? There's the tech bubble, and then the first bailout, and then there's global financial crisis, and another bailout, and what do? We increase the supply of money. When you increase the supply of money, what happens to the value of that money? It goes down. So gold has been this perfect store of value. Well, Bitcoin is digital gold. What do I mean by that? If you think about gold, it's not very portable. Like if I had a brick of gold here, a bar of gold, and I wanted to break it in 3 pieces and send it to you, I feel like I'm a strong guy, but I'm not that. I couldn't break it. Okay, it's hard. Even if I couldn't stuff it in my computer and send it to you. If I want to send you the equivalent of 1/3 of a gold bar in Bitcoin, it's like 7 punches of a button, and it's in your wallet. So it is a better form, and I think Bitcoin, like everybody says, I have 3-4% of gold as a hedge against inflation. Replace that with Bitcoin. Simple. And how do you do it? Well, you could buy a security. It's not a perfect way because they trade at a discount because they're closed-end funds like GBTC. I would argue you should buy our ETF, right, which uses futures to get exposure. So you could buy CRYP, but that's just one way. But that's the first way. Second is to own some other assets.
Yusco points out that despite Bitcoin's impressive market capitalization of $400 billion, even if it were to reach $4 trillion, it would only represent a tenfold increase. In contrast, Ether currently boasts a market capitalization of nearly $200 billion, and a similar increase to $4 trillion would result in almost double the growth. Yusco further highlights that if Avalanche can serve as an intermediary layer or bridge connecting Ether, it has the potential to increase by as much as 50 times. Yusco believes that this comparison is just one of the reasons why blockchain projects like Ether and Avalanche are likely to withstand volatile market conditions and play a crucial role in the cryptocurrency industry.
Ethereum to me is a bridge to the digital world. And here's where this comes from. If we think about pre-internet, there were no connected anything. Every computer stood on its own. They didn't really talk to each other. The internet comes along, and because of internet protocol and TCP transfer control protocol, internet protocol, TCP/IP, they can now talk to each other. And that's the base layer of the internet. Well, on top of that, there's something called FTP that allows us to transfer big files. Then there's SMTP that controls email, HTTP that controls websites, and then www that ties it all together.
Yeah.
So if I think about this new world, this Web3 world, well, Bitcoin is kind of like the base layer. It allows us to transfer value seamlessly, permanently, like digital gold, to money. The base layer of money is gold. So, okay, that's that. On top, what ties it all together? This toolkit, this Ethereum, www. It's kind of like that.
Detractors argue that the absence of regulation has played a significant role in the volatility of the emerging cryptocurrency industry. For instance, in 2022, the industry experienced a series of collapses, with several cryptocurrencies and crypto companies, including industry leader FTX, collapsing, resulting in massive financial losses estimated in trillions of dollars. Yusco argues that Bitcoin's volatility should not be viewed as a drawback, but rather as an advantage. He believes that investors should seek out volatile assets, particularly those with upside potential, as this is the essence of investing. While downside volatility can be painful, holding an asset that has experienced volatility, while also compounding at a rate of 223% per year for 11 years, is precisely the point of investing. He believes volatility is an inherent characteristic of high-performing assets like Bitcoin.
Jeff, mom, dad, ex-wife, Bill Miller. That's it. Everyone else is shaken out by the volatility. And if you look at Bitcoin for 14 years, it's compounded in the high 80s, twice as good as Amazon, same volatility, but people are afraid of it. So we created this vehicle, Crypt, that truncates that volatility down to 40 to 50%, still high, but that's because volatility isn't bad.
Yeah.
Every asset in the world that compounds at a high number has high volatility. That's just math. It's pure math. I can guarantee everybody you have no volatility. Put it all in the risk-free rate. Get no volatility, you make no return. So volatility is not your enemy. In fact, I have a t-shirt that says, embrace volatility.
Yeah.
It is your friend. But you want to do it in a diversified portfolio with strategies that are active, that allow you to control the volatility so that you take risks that you want to take and risks that you're compensated for. When you take risks that you're not compensated for, that's not intelligent. When you take risks that you're compensated for, that's how the intelligent investor works.
Bitcoin's impressive performance with a 70% surge in value so far this year has left many insiders feeling bullish about its future potential. Marshall Beard, Chief Strategy Officer at Gemini, a US-based cryptocurrency exchange, is optimistic about the asset's potential, stating that it could even reach $100,000. Moreover, the cryptocurrency industry's positive outlook is partly due to Bitcoin's resilience amid the banking chaos triggered by the collapse of Silicon Valley Bank.
Oh, for sure.
Yeah.
Not tomorrow, but yes. And here's why. So it's just math. I have a hashtag just math. And so much in life really is just math, right? Why does Amazon stock rise over the long term? Not every day, not every month. It's math, right?
Yeah.
They provide a service that has become absolutely necessary for everybody. And they basically earn a massive spread because they're the only ones that can do it effectively. They match buyers and sellers, right? They don't make stuff. They're not a manufacturer. They are a search engine, and they match buyers and sellers, and then they deliver stuff. So it's a great business. Or, you think about arbitrage, right? Arbitrage is a time-tested business. If you can buy an asset in one market and sell it simultaneously in another market at a different price, that is a perfect trade, right? And it's hard to do in an electronic and digital world, but it still exists, and there are people that do arbitrage. So if we think about why does it exist? I said it's digital gold. Well, what does that mean? Well, it means that as people realize that this is a digital store of value, okay, it will approach the monetary value of gold. Okay, well, what's the monetary value of gold? Well, there's about $10.5 trillion of gold above ground in the world. Half of that is earrings and necklaces and chalices. That doesn't count. I mean, it's real and it's wealth, but that doesn't count. The monetary value, gold bars in central banks, the base layer of money, right? All the money in the world, all the currency in the world is based on that base layer of about $5 trillion of gold. Okay? Why? Because custom and precedent. 5,000 years, we decided that was it. And we tried other things. We had puka shells and stone wheels, but gold has been it. So at $5 trillion, so we're at about 400 and something billion dollars for Bitcoin. At 5 trillion, that gives us a price of about 400K per coin. Some would say, well, we just get the other part of gold, right? The physical gold. Physical gold has an advantage, right? We all heard the stories. If you were trapped in some terrible place and you need to bribe somebody and you had a little gold earring or whatever, you could get out of Dodge.
Yeah.
So physical gold will always have a role. Because, tough to say, hey, I'll send you some Bitcoin, trust me. Yeah, and electricity might not work, but whatever. So physical gold will always have a role.
Yusco, a hedge fund manager, investor, and Bitcoin advocate, asserts that Bitcoin is supplanting gold as a store of value. He also wonders if Bitcoin could surpass traditional banking systems and become the currency of the future. That wraps up our conversation for today. We encourage you to share your views in the comments section. If you found this content informative, please give it a thumbs up and subscribe to our channel for the most up-to-date news and videos. We appreciate your input and look forward to hearing from you again soon.